What's going on, traders? Hey guys, just getting back from traveling. Was up in Toronto, as most of you know, for the Blockchain Impact Conference. Wednesday through Saturday, I was up there, and we come back here today, guys. Pretty exciting and historic day with Bitcoin futures trading. This is. I think you look back on this. If you're throughout your trading career, or just really, 10, 15, 20 years from now, this will be pretty exciting day to say that you were around and involved in a brand new asset class trading on the futures market for the first time. I've never experienced that before. I guess probably the last time we really added any significant market to a big exchange out of Chicago, whether it be CME, CBOE, or back when it was a Board of Trade before they got bought out, was probably back in the 80s, guys, when interest rates were just coming online. You could trade futures on interest rate products. So pretty historic day, and I have the Thinkorswim futures chart up. You can't trade through there yet, but you can certainly view the chart. So it's exciting, guys. The same way we trade forex and oil markets and everything else. It's going to be nice to be able to start trading CBOE futures and then CME futures. Hopefully, here closer towards the end of the month. Those are supposed to come online, I think, the 17th. So as of now, it looks like CBOE is going to be $10 a tick. I'm assuming a tick is $1 move, so 1 point. A tick is different in the bond market. A tick is 1/32 of a point. So typically, when you're following something that has a decimal in futures markets, it's actually you just go to the whole number. So we'll see if it's $10 a point, or if it's like the CME has it at every contract is going to be 5 BTC. So that could be $25 a tick. A little bit more leverage there. Right now, CBOE has 1 BTC per contract. So it looks like it's $10. You probably have to put up about 30% margin on that. So 30% of 18,000 looks like that's what the leverage is. Some exchanges and some brokers might be able to give you more or less. But this is great, guys. This is this is just how these markets develop and mature. So it's a great thing for Bitcoin in general. You don't listen to the nonsense about manipulation, etc. You're going to have spreads between this stuff. It's just natural. I mean, you can see how illiquid it is. This is the 1 minute chart. I wanted to show this because this is the pie line here. You don't even have a pie line that's developed on the 5 minute chart yet. There just hasn't been enough time that's gone by. And then you can see that the Bitcoin, the futures curve is starting to develop, where you can look at the different duration of the contract. So here, this is the front month, they call that. This is the January contract. All right, so it's trading here 17,860. If you go out the curve, meaning out the futures contract that expires probably February. I'm not exactly sure these dates, but this is F8. So G8 is, you'll see it's a different price, much less liquid, not as many trades. I'm not sure how much is actually traded here. I'd have to look at the tape, but you can see we're trading up at closer to 1900 here. So this isn't manipulation, guys. It's just people are going to be willing to pay higher prices the further out in time if they're very bullish on the space. So the further you go out in time, that's why this stuff is trading. The contract that's out 93 days has 18,000 bid to it. See that? So that's different than the January contract here. So anyways, there's lots to, if you guys aren't familiar with futures, probably a good time to learn about them. Futures and options is going to be nice. Couple extra tools in your tool belt, arrows in your quiver when we want to trade Bitcoin, especially when you want to day trade and swing trade. So I'm looking forward to it. I really always have loved trading off Thinkorswim's charts. Even if you want to execute on different platforms, this is something we do a lot. So that said, why don't we take a look at the overall cash market, and I'll just do a quick update here on BTC. So what I found interesting, guys, here over the weekend, and I guess into late last week, was we held pi twice. We held this 14,000 level. We held it here in front of the 200. The bands kind of went flat, tightened up, took out this low, and then you got the retest of pi, bounce, retest of pi, bounce. There's been some nice 30-minute cycles down here to add. So if you guys want to trade more frequently, if you want to day trade, this 30-minute cycle is a great way to do it. Let me just highlight what I'm speaking about here. So you want to look to be buying dips here. These are great places to start your day trades. All right. So in addition to your core position, you buy some, take some off. Buy some, take some off. Even though you don't get much of a pullback from here to here, you can still rebuy just based on time, just based on the cycle there. That's a T for time. Buy there, boom. Take some back off the top of the cycle. So this is how we trade the Forex markets and any other markets. It's no different. This is the fractal nature of our model, guys. So this is what we want to be doing more so with the futures and options. It's better leverage than just having to put up a bunch of cash for full Bitcoin, etc. So, but directionally, guys, some nice moves on the 30-minute, and then big picture. Well, let's just do a top down on Bitcoin, the monthly chart. Now, this is obviously anybody that's traded markets is going to tell you this is bubbly for sure. So we're due for a pullback. It's just that this is a pretty historic, transition that's going on, both from a technology standpoint, a monetary system standpoint. Just it's a brand new asset class. All the reasons we talk about. So these types of markets can go further than you think. It looked bubbly at 6,000. It looked bubbly at 8,000. Looked bubbly. So that's not really helpful just to say, oh wow, this is a bubble. It doesn't help anybody to talk like that. Use your use your trailing methods like we talk about for when to play defense, when to go to the sidelines. And now that we have options and futures coming on, you'll be able to short the futures to hedge your core long. You can buy puts. So now we're really opening it up to the true professional risk management, how you manage a trend and how you trade stuff like this. It's tough to trade a vertical move because most people, they sell everything because they think it looks overbought, and then it continues to go a lot higher than they think, and they miss out on all the move. So weekly level, what we care about are these higher lows. So you can follow the 8 here. It's done a pretty good job, but let's not be unaware or disillusioned about the distance we have between the 8-week here and price. So there's plenty of reason to take profits up here, guys, when you buy something well. This is not really a time to be getting aggressively long. We should have been doing that on these dips here below the 8 or even back at the 8. So we're basically 1, 2, 3, 4, 5 candles off this low here. This is 1, 2, 3, 4, 5, 6. Let's actually count this out. So we like to keep an eye on that 8.6 frequency. So off the cycle low, 1, 2, 3, 4, 5. Wait, 1, 2, 3, 4, 5, 6, 7, 8. So there's your 8 count. Or if you want to start this as the cycle count low there, 1. This is 8. And then so we're on another 8 count here. 1, 2, 3, 4, 5. This is the fourth or fifth week, guys, in a row up. So we're coming up into getting a little bit lengthy in this the 8.6 cycle count. Another reason why maybe we need to pull back towards the 8. You know, the cycle's pretty high here also. Let's look at the daily. So we're still core long, obviously. Just notice how this is just a classic power trend, guys. You just hold in the bands. When it really takes off, you can't even break the 8 here. Just notice how we're just following that 8-period moving average. Can't even break it. That's called we call that the 8 train. Just riding the 8 train. So when you get away from it, take some off, buy some back, take some off, take some off, buy some back. And so only a break of the bands here, guys, is going to put me into defensive mode. You notice how the bands here are close to 9,000. I talked about 10,000 being a pretty good line in the sand. All that volume that we saw when Coinbase and every other site was crashing when we got above 10, that's going to put a nice floor, a nice whole number below the market. So I think we're in more of a 10,000 to 20,000 range now if you want to put a long-term risk range on it. 10K to 20K. So unless we come back down here and break 10,000, there's no reason to be long-term out of your core position, no reason to be playing defense longer term. Still want to stay bullish. Now you'll notice, let's go to the daily chart and look how price has been holding the 8. You're making the higher lows. Oh, sorry, that is the daily. I mean the 4-hour. You're holding the bands here also. Nice hold there. And we got a pullback here over the weekend. Held the bands. We were buying down here. Bought some at 15,000 also that we came out of this morning. So still bullish, guys. This pivot low now here matters. I guess depending on what you're looking at. This is GDAX versus the dollar. Gemini, let's see, versus the dollar. It's about 13,000 level. So that's a pretty good pivot. Notice how this is a 4-hour cycle low. We bounced back up towards the highs, towards 17,000. So if you buy on this swing line low, or this swing time frame low, then you can come out of some. So keep trading around your core long position. If we break 13,000, I would expect to see that deeper pullback to retest 10,000. So there's no reason to make a call for 10,000 unless we break this low. Until then, you want to just continue to play the higher lows. So if we have a 4-hour cycle move back down, I'll be buying back. Maybe that's closer to 15,000. If we have another 4-hour cycle low. And that's the game plan. If we make a new high, we'll be taking some profit into 20,000. It's going to be another big whole number the media will be talking about. Anyway, guys, hope that helps.